Good morning, ladies and gentlemen, and welcome to Afya's second quarter 2020 earnings conference call. At this time, all participants are in a listen-only mode. Later, we will conduct a question and answer session, and instructions will follow at that time. As a reminder, this call will be recorded. I would now like to introduce your host for today's conference, Renata Couto, Afya's head of IR. You may now begin.
Thank you and good morning, everyone. Thank you for joining us for Afya's second quarter 2020 conference call. With me on the call today is Afya CEO Virgilio Gibbon and Luis André Blanco, our CFO. During today's presentation, our executives will make forward-looking statements. Forward-looking statements generally relate to future events or future financial or operating performance and involve known and unknown risks, uncertainties, and other factors that may cause our actual results to differ materially from those contemplated by these forward-looking statements. Forward-looking statements in this presentation include, but are not limited to, statements related to our business and financial performance, expectations and guidance for future periods regarding our strategic product initiatives, and the related benefits and our expectations regarding the market as well as the potential impacts from COVID-19. These risks include those more fully described in our filings with Securities and Exchange Commission. The forward-looking statements in this presentation are based on the information available to us as of the date hereof. You should not rely on them as predictions of future events, and we disclaim any obligation to update any forward-looking statements, except as required by law. In addition, management may reference non-IFRS financial measures on this call. The non-IFRS financial measures are not intended to be considered in the isolation or as a substitute for results prepared in accordance with IFRS. We have provided a reconciliation of these non-IFRS measures to the most directly comparable IFRS financial measures in this presentation. Let me now turn the call over to Virgilio Gibbon, Afya CEO, and starting with slide 4.
Thank you, Renata, and thanks everyone for joining us today. As the COVID-19 crisis continues to have effects all over the world, we remain committed to the health and safety of our employees, students, teachers, and the communities we operate. Before I get into a discussion of our second quarter and first half results, I want to take this opportunity to reflect on our first year as a public company. We were able to build and deliver some impressive results. While we are currently dealing with the pandemic and resultant economic challenges, we are confident in the strength of our company as we continue to enhance and grow our business. We have achieved our position as the leading medical education company in Brazil, partially through acquisitions. Over the past year, we have completed 6 acquisitions and created a successful track record of integration of acquired companies, delivering cost efficiency and synergies. Last month, we acquired our first digital health tech company, PebMed, adding digital assets to our service offering. With respect to medical seats, we have added more than 700 in less than 1 year. 70% of our goal for adding 1,000 medical seats over a 3-year period post-IPO. Taking into account the 2 most recent acquisitions, our medical seats now stand at 2,143 seats. On top of that, we still have more than 800 seats being analyzed under MOU contracts. As you can see, over the past year and also during the COVID-19 crisis, our financial results have been great, consistently exceeding our guidance, delivering strong top-line growth, improving profitability, generating free cash flow, and maintaining a healthy financial position that creates a virtuous cycle of capital allocation opportunities and cash generation. Now on page 5, I will show our financial highlights. We delivered another solid quarter with broad-based organic revenue growth, contributions from acquisitions, margin expansions, and cash flow improvements, reflecting our excellent execution even during COVID-19. The executional excellence has enabled us to exceed our financial expectations for the second quarter and surpass our first half 2020 guidance, position us for another great semester. During the first half, occupancy was at 100% during the quarter, and given this strong demand for medical seats, allowed us to maintain the same price strategy. As a result, revenue increased 54% year over year. It's important to note that as we moved all classes to our online platform in March, we are not able to offer some of the practical classes during the semester. This deferral has impacted our first half net revenues in 14 million reais, but will be fully recognized in the second half. Our team executed well in key areas of our business, particularly with integrating acquisitions, extracting synergies, and scaling Afya's operation. In turn, we generated significant top-line growth and margin expansion in the quarter and 6-month period. We will still have synergies to capture as we move ahead with the integration of Uninova FAP, Medicel, Uniredentor, and Unisan Lucas. We completed the first 2 integrations immediately after the second quarter, and for the last 2 is expected by the first Q of 2021. Lastly, our balance sheet is strong with over 1 billion reais in cash and cash flow generation with an 83% EBITDA to cash rate. Our financial strength and cash flow generation capabilities afford us flexibility to execute our expansion strategy and remain opportunistic, nurturing our M&A pipeline. Moving now to page number 6, we'll discuss about PEBMED. Although PEBMED was a 3Q event and we held a conference call to discuss the acquisition, I want to take some time today to reinforce the importance of this acquisition. As a reminder, PEBMED provides tools and content for healthcare professionals through the White Book and Nurse Book apps and through the PEBMED news portal. It's also the market leader in clinical decision software and has an extremely popular app ranking the top 10 Brazilian apps by consumer spend. The business model consists of both paid subscription and free content. This was an important acquisition for us as it progresses our digital effort to improve the user experiences and efficiency of both healthcare students and other healthcare professionals. Our strategy is to combine quality medical education with intensive use of technology, and PEBMED is a key component of it. With this acquisition, we enter into the digital health service segment and strengthen our BU2 product offering, which is also a relevant component of our growth strategy. On slide number 7, we will discuss a little bit more of our digital strategy. The pandemic proved that both individuals and healthcare professionals were willing and able to adapt to a more digital world and caused us to accelerate the expansion of our digital business. We are committed to provide innovative technology solutions that assist our students as they spend more time online to work and study. Additionally, we see the opportunity to maintain a relationship with our postgrad students and through their entire careers. Our increased product offerings is driving more users to our digital assets. During the quarter, our monthly active users increased 27.6% compared to the first quarter of this year. Stepping back and looking at the long-term opportunity, there was already a seismic shift happening in the digital healthcare world even before COVID-19. We believe that this shift has been accelerating the last several months and will continue post-pandemic. Additionally, we believe that this shift, combined with our strong brand and the deep connection we have built with our students and alumni, position us to capitalize on the opportunities ahead. On next slide, we'll start the discussion about our recent acquisitions. As you all know, M&A is a key pillar of our growth strategy, and we are taking a disciplined approach to grow our portfolio. During this time of significant business disruption and uncertainty, we are taking steps to strengthen our leading position. Now, where we see the opportunity, we accelerate our strategic plans. To that end, during the past week, we announced 2 strategic and accretive acquisitions. The first one was Faculdade de Ciências Médicas da Paraíba, a post-secondary education institution offering undergrad medical programs in the state of Paraíba. It's our first school in this state. The second was Faculdade de Ensino Superior da Amazônia Reunida, or FESAR, a post-secondary education institution with authorization to offer on-campus undergrad courses in medicine in the state of Pará, our second school in this state. Ciências Médicas da Paraíba adds 157 seats and is the second largest acquisition for us in terms of approved medical seats. We see the opportunity to increase our organic growth rate primarily as we increase the number of seats at maturity at Ciências Médicas da Paraíba to 1,130, up from 850 currently. FESAR brings another 120 medical seats and currently has 227 medical students and a potential of 864 medical students at full maturity. Combined, these two acquisitions take our medical seats up to 2,143 seats. Now on page 9, we will see our integration track record. As I just mentioned, we have completed 6 acquisitions the past year. And as indicated on both charts, we have a successful track record of integrating these acquisitions and capturing synergies. In January, the margin expansion has been over 1,000 basis points in slightly less than a 2-year period after acquisition. The current operating environment has not slowed our integration process with recent acquisitions, and we are moving ahead with the group you see listed in the box on the right-hand side of this slide. As we integrate acquired companies and gain further scale, we are able to see value creation and margin improvements, reflecting cost efficiency and synergies. Now, on page 10, we'll talk about our future perspectives. We are coming off of a very successful year as a public company, and 2020 is also a great start. We have a successful business model with highly predictable growth. We will continue to focus on 5 key areas. First, strategic M&A. Second, pushing further into our digital initiative. Third, successfully integrating acquisitions. Fourth, delivering sustainable and predictable growth. And 5, maintaining a healthy balance sheet. Beginning with M&A, which has been and will continue to be a key component of our strategy. We have completed 6 acquisitions after IPO, both medical schools and digital. Importantly, we have a solid pipeline that has been growing during this challenging period. As I mentioned earlier, we are working diligently to further enhance our digital capabilities. We will continue to invest in our strategy to add more digital assets and solutions to support our medical students and other health professionals. While BU2 represents a small part of our overall sales to date, we see significant opportunity to grow this business. Our solid balance sheet, coupled with strong cash flow generation, create a virtuous cycle, providing the financial flexibility and competitive advantage to continue executing on our M&A strategy. And given the high predictability of our business model, I'm confident in our ability to generate meaningful cash flow, further strengthening our financial position. Overall, our consistent momentum is continuing, and we are pleased with our results in the first year as a public company. For the second half, we have already fulfilled 100% of the medical seats, and we are confident to achieve our second half guidance, confirming the resiliency and the right predictability of Afya's business model. I will now turn this call over to Luis for more color on our financial results and the second half 2020 guidance. Thank you.
Thank you, Virgilio, and good morning, everyone. I would like to stress what Virgilio just said. I'm particularly proud what we delivered a successful quarter and the first half results that exceed our guidance. As already discussed, at the end of the first quarter, we were able to quickly move all of the classes online, which in turn enabled us to report a good first half. Moving to page 12, my discussion will focus on the main and most significant P&L items. There is additional info in the earnings press release that you can refer for further more information. Our second quarter earnings represent a solid result in view of the current global environment, and as you will hear over the course of my presentations, we had a very good quarter across all key metrics. Let me highlight a few. Both medical seats and students saw significant increases during the quarter. With respect to the number of medical school seats, we added 414 seats year over year for a total of 1,516 by the quarter end, a 38% increase over second quarter 2019. Reflecting the seating maturation process, the total number of students in the second quarter 2020 was 9,097, an increase of 64% over the same period of the prior year. And as you heard from Virgilio, subsequent quarter end, we added another 277 seats with the acquisitions of FCMPB and FESA. Taking into account the acquisitions we have already made, our full potential as of today is 2,143 seats and more than 15,000 students, which lead us to a 13% organic CAGR in the student base, consider the period between 2019 and 2026. Net revenue for the quarter was up 48.8% year over year to 274 million reais. Excluding the acquisition of Uniredentor and São Lucas, pro forma net revenue grew by 18.8% year over year, reaching 219 million reais. The increase was primarily driven by organic revenue growth, mainly due to the maturation of medical school seats and an increase in average ticket. The strong top-line growth combined with cost efficiency and resulting synergies from acquisition was reflected in adjusted EBITDA, increasing 73% to 180 million, and a margin expanding 780 basis points. Excluding the consolidation of Uniredentor and São Lucas, pro forma adjusted EBITDA increased 44% year over year to 98 million reais, and the margin increased 780 basis points to 44.8%. Adjusted net income was up 163%, reflecting the revenue contribution, synergy capture, and margin expansion from the consolidation of the acquisitions. Earnings per share increased 183% from 23 cents in the second quarter 2019 to 65 cents in the second quarter 2020. Moving on to page 13 for a discussion of key operating metrics by business unit. We delivered a solid growth across both business units, continuing performance very well. Growth is a key operating metrics as shown on this slide, is being driven by combinations of organic growth and acquisitions. Starting with BU1, our average monthly medical tuition fees at the semester end were 8,157 reais, which was 14% above the same period in 2019. This reflects a combination of new students enrolling with a higher tuition rate combined with students graduating with a lower tuition. As shown in the middle charts, 76% of our combined tuition fees are derived from medical schools. The combination of a 32% increase in the number of students and a 14% increase in average tickets results in combined tuition fees up 50% when compared with the first half 2019. With respect to BU2, We had almost 16,000 active paid students at the quarter end, an increase of 47% over the same period last year. We can see an increase of 26% and 22% in the number of students of prep course and CME for B2B and B2C, respectively. Regarding medical specializations and others, with Uniredentor, we saw an increase of 161% in the number of students. Moving on to a deeper analysis of revenue and EBITDA on slide 14. We are fortunate to have an experienced team that's proving once again that they can continue to successfully execute the complex work of integration, acquisitions, and capturing synergies. As shown on this page, we have provided a net revenue and adjusted EBITDA bridges from our historical second quarter 2019 revenue to a reported second quarter 2020. For the first half, net revenue increased 69% to 547 million reais. Excluding the consolidation of Uniredentor and São Lucas, net revenue grew 47% in the first half to 476 million reais, with a contribution of 93 million reais coming from acquisitions and 60 million reais coming from organic growth, which is comprised of the maturation of medical school seats and an increase in average ticket. Uniredentor contributed revenue of 14 million reais in the first half, while São Lucas contribution was 31 million reais. On the right side of the page, we show first half 2020 adjusted EBITDA. During the period, adjusted EBITDA increases 82.7% year over year to 259 million reais, with 360 basis points expansion in margin and 23 million reais contribution from Uniredentor and São Lucas. Excluding the consolidation of Uniredentor and São Lucas, adjusted EBITDA advanced 66.5%, with 48 million reais contributed from prior acquisitions and 46 million reais coming from organic growth. The adjusted EBITDA margin, excluding these two companies, expanded 580 basis points. Moving next to a discussion of cash flow on slide 15. Cash and cash equivalents of 1.1 billion reais at the quarter end was up from 960 million reais at the year end 2019. The significant increase in cash compared to year end 2019 reflects strong cash flow generations and the proceeds from the July 2019 IPO and the February 2020 follow-on offerings. The majority of these funds is invested in low-risk Brazilian reais denominated instruments. The total debt was 535 million reais at quarter end 2020, up from 361 million reais at year end 2019, related to acquisition payables. Cash flow generation remained strong in first half 2020, increasing 81% to 202 million reais, which results in a cash conversion ratio of 82.6% compared to 85.4% in the first half 2019. This was a slightly lower cash conversion ratio year over year and is mainly due to the consolidation of MedCell business and our students' renegotiations overdue monthly installments due COVID-19 crisis. Turning next for a discussion about guidance on slide 16. We are pleased with our second quarter and first half results, and our guidance for the first half of this year demonstrates that we are still in early stages of growth. As a reminder, the world is still in the middle of a pandemic. Economics are slowing, opening up, and our guidance takes into account the best information available at this point of time. Two key metrics for second half 2020 guidance are the following. Second half 2020 adjusted EBITDA margin ranging between 45.5% and 47%. Our guidance includes the impact of the adoption of IFRS 16 and includes Uniredentor starting February 2020, São Lucas from May, PebMed from late July, and excludes any other acquisitions that may be concluded after the issuance of this guidance. And as we look ahead, we have a complete intake process for the upcoming semester, and given the strong demand we saw for seats, we have filled 100% of our medical seats, maintaining our revenue growth resilience and high predictability even under these uncertain times. Additionally, included in the revenue outlook is the revenue recognition for some practical classes that could not be held during the first half and were pushed out to the second half of 2020 upon the resumption of the classes. This amounts to 14 million reais. To sum up, we are pleased with the strong quarter and first half results and the continued momentum in our business. We're confident the strategic investments we are making to advance our growth strategy will enable us to continue to deliver consistent revenue and profitability growth as we remain on track to achieve or exceed our fiscal 2020 financial targets. Afya is in a strong financial position with a high liquidity. We have a history of robust cash generation, a clearly defined margin growth strategy, and experienced team with a proven track record of delivering results and handling difficult times. And COVID-19 has not changed any of these factors. These end our prepared remarks. We are now ready to take your questions. Operator, please open the lines for questions.
Thank you. We will now begin the question and answer session. To ask a question, you may press star then one on your touchtone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then two. Please hold while we pull for questions. And today's first question comes from Marcelo Santos of Banco JP Morgan. Please go ahead.
Hi, good morning. Thanks for taking my questions. I have two. The first question is regarding BU2. Could you please provide a roadmap of your plans for the next 2 years? How do you plan to monetize and integrate these assets? Whatever light you could shed there would be very interesting for us. And the second question is regarding M&A. We have limited information, but with our information, it seems that the recent acquisitions have been a bit more expensive than the previous one. Maybe that's justified by quality, but they look more expensive. So the question is, are we seeing that the good assets we're getting to the end of the good assets, or is competition heating up? We have been seeing other players also becoming more vocal on med schools when in the past they were not. So any comment there would also be very helpful. Thank you.
Oh, hi, Marcelo. This is Julio here. Hi, everyone. Thank you for participating in the call here. So answering your first question in regards to the roadmap for BU2. So more and more, BU2 is an extension, of course, of what we've been doing with our undergrad business, right? So we've been focusing a lot first on the digital part of integrating more and more our digital platform. So this is the first thing. So we're investing in the development of the integrated solution where we offer one single platform for all of our students. So just as an example, we are now launching still this year the app that integrates the digital experience in the graduate business, adding more services to our students on the graduate business. So first thing is that we are providing this digital platform, and now actually with a white book, the app from PebMed, the idea again, 90,000 users, paying users for that particular app, imagine the potential that we have to distribute and to market other courses that we have for continuing medical education with more micro learning. So ideally, we want the roadmap is based on having our students and medical students using our platform so we can provide and sell and cross-sell products, educational products, and now moving also to digital services. So this is for the next 2 years is to integrate the digital platform so that we can serve all of our students having one single experience on the digital platform. So hopefully I'm answering your questions, but I'll hand over to Luis for the second one.
Thank you, Julio.
Hi, Marcelo. Virgilio, take your second question here about the M&A. Of course, that the pipeline M&A and the competition is getting high. It's getting more vocal. That's one of the costs to be a public company for sure. But in our view here, the more mature transactions, when we are acquiring more mature institutions, will be completely related to EBITDA multiples. And we are doing very accretive transactions, considering that we are investing our capital, our cash, in terms of that we can extract synergies in a very short term, in 4 to 5 years, jumping revenues, jumping margins. And also, it's not only a 6-year duration program that we are taking into consideration here. We have a very long relationship. As a goal, we are aiming at least at 20% of IRR for all of these opportunities. And in terms of multiples, after synergies, post synergies, it will be around 4 to 5 times most of them. So that's the way we are looking, and we keep looking these more traditional acquisitions.
Marcelo, just adding some points what Virgilio just said. Of course, we analyze each one of these acquisitions. Virgilio, in his speech, told that we have a pipeline with more 800 seats that we are analyzing case by case, always referring to it, evaluating it with IRR and EBITDA multiples in maturations. Each process is different. Each process, each acquisition is different. One of them that we announced in these last 10 days, one of them was a competitive process. Of course, in this one we face a little bit more pressure in price. The other acquisition was a direct negotiation. So what you can expect from us is to keep our financial discipline in these acquisitions. Always try to give the best return on our capital allocation.
And our next question today comes from Mauricio Cepeda with Credit Suisse. Please go ahead.
Good morning, everyone. Thank you for this time to answer the questions. In fact, I just have one, and it will be a follow-on of my colleague, insisting a little bit on M&A. As the other groups are now much more vocal and possibly a little more in need of this kind of medical seat acquisition, as the other higher education businesses are not doing well. And so far we saw that you are paying progressively more for these targets. You were right, they are accretive so far in terms of multiples. In a payback methodology, very simple one, we see that it takes some years to get the investment back anyhow. But in a case where the competition gets tougher and your competitors start to overpay for the targets, what are your plans? Are you more willing to do a defensive move, not to let them win, or do you privilege a little bit more the financial rationale of the transaction? Thank you.
Hi, Mauricio. This is Virgilio here. First, the type of assets that we are targeting, they have to be very concentrated in medical and health programs. So above 60-70% of the revenues coming from this program. So I truly believe that we are 100% focused on these offerings, have some kind of differentials, not only because of the quality of our program, but we are also licensing our platform for other institutions. So there is a component of reputation here that we are getting close. So most of the other institutions focus on medical school. Of course, that if the price goes up, so like a competition goes even more stronger and become a war. In our side, our strategic is we already have an ecosystem, a distribution channel, very, very large. So it makes a lot of sense to start partnership, licensing our platform, capturing these students in the beginning of their career as a third-party students using our platform, and tracking them out for the entire journey for 4 years, offering our platform, our portfolio with the continuum medical service, and also now with health and digital services using platforms such as PetMed. So that makes a lot of sense and a better use of capital allocation instead of getting a war. I'd like to see all of the other players as a potential partner that can use our platform, our system that will be even better the time goes by, and we are investing a lot on this platform. So having said that, we still see many opportunities to have very good great transactions in medical school, and also now we are completely aligned and focused, looking for additional services on our digital platform. So that's how we're thinking here.
Mm-hmm. No, very clear. Thank you.
And our next question today comes from Irma Stars with Goldman Sachs. Please go ahead.
Yes. Hi, good morning. I hope you're all doing well, and congratulations on the very strong results. And thanks for taking our questions. The first one that we have here is related to the margins.
We have someone.
Hello? Can you hear me? Hello?
Hello, this is the operator. The speaker locations, can you hear me speaking?
Yes, Irma. Go ahead.
Okay, thank you.
You can hear me? Okay, perfect. So back to, I wanted to ask about margins. You had obviously very strong underlying margins in this last quarter, and they evolved very well. If we think, and we see the guidance for the back half of the year, but when we think a little bit beyond sort of for the next couple of years, again, understand that your guidance is restricted to the second half of the year, but could you just help us understand the average maturity of your legacy medical campuses and also the average maturity of the recent acquisitions that you're integrating, please? Because it will be helpful to just think through how your margin can still progress from here. And then second question we have is regarding the Mais Médicos projects, if you have any update that you could share there, please. Thank you.
Hi, Irma. Thanks for the question. In terms of margins, as we have many institutions that were recently acquired, we still have a lot of room for improvements. Still have low-hanging fruits. I said in my speech that we still have large institutions to have full integration and capturing more synergies and efficiency, such as Uninova FAP, São Lucas, and Uniredentor. They are very large institutions, and we are not extracting not even the 50% of the synergies that we are looking for these assets. So we are aiming to have at least 5 percentage points for gross margins where we are operating this business unit 1, considering IFRS 16. So that's still opportunity and room for improvements in our efficiency on this side. On your second question about the Mais Médicos program, we still are waiting for the final conclusion, at least for 2 institutions. We are very close to have 2. I expect this year to have the final authorization. And the other 5, I think it's more reasonable to expect for 2021. So 2 of them very close to have the final approval, the final signature from the Minister of Education. We are seeing some of cities in the 28 cities from the last Mais Médicos process being already authorized, and I think we are very close to have the first ones starting.
And Irma, just adding some points in your first question. Let me just give you an example that is São Lucas and Redentor. As you can see in our press release, the consolidation of these 2 units that we bought on the first semester had reduced our consolidated margin. So of course we have different institutions, different percentage in these institutions between medicine, health, and other programs. We have different maturation stage, so it's very difficult to put an average on that. But what you can see in our presentation, that when we acquire the institution and use our playbook, doing the cost reductions in the first step, migrating these institutions to our shared service center, implementing our people plan, and after it's implementing our full national curriculum, what we can see that we capture these efficiency along of this process. So we are very confident in our playbook and very confident that we can extract the synergy in each one of these acquisitions.
That's great. Thank you very much.
And our next question today comes from Susanna Salaru with Itaú. Please go ahead.
Hi, good morning, guys. We have 2 questions here. First, I just want to clarify the answer related to the partnerships that Afya, that Virgilio mentioned that Afya have with several other potential targets. I'm sorry, we couldn't understand properly the answer. You guys have you aim to have partnerships with the next targets or the potential targets in terms of acquisition, or you have already some kind of MOU or some kind of non-binding offer with some of the target alternatives that you aim to materialize in the future. We didn't understand what is the kind of contract that you have with these potential targets that will facilitate your acquisition relative to the other players in the market. That would be our first question. And then our second question is related to PEBMED. We discussed a lot about PEBMED potential upside and cross-sell with the medical students. We know that PEBMED also is used for other healthcare careers. So we were wondering if when we should also take into consideration the percentage of students that you have in healthcare, and if you're going to leverage PEBMED cross-selling for those students as well, or you're going to focus exclusively in medical students and in nursing. Thank you.
Okay, Susanna, I'll take your first question here, then Julio will help me on the second here. But just to separate this point, we have around 40 medical institutions using our Persona platform to help them during the COVID-19 to keep running their learning process and all the semester for these students. Some of them, we have a B2B contract as a licensed learning, traditional learning system product to help them for more than 1-2 years. It's not a for free problem. So it's 4 institutions using, and today we have 6 of them paying a SaaS model per user our platform. Of course, that this relationship can be an opportunity for us to leverage M&A of acquisition. And also, when I said about 800 seats, this pipeline, it's under MOU contracts. We are doing our diligence. So the pipeline is getting bigger and it's very fertile. So has something to do with this relationship that we have, but we have already mapped all the medical institution that makes sense for us in terms of target for M&A area.
Okay, Susana, Julio here. In regards to the strategy with PebMed, if you see the numbers, of course, the revenues, they come from the doctors and medical students that are using specifically Whitebook. Nursebook, if you consider the number of nurses and the number of technicians on nursing as well, I mean, it's a significant number. It's about 2 million people in the country. You know, the penetration so far is about 60,000 users. There's still room to grow, of course, but it's a different audience, right? So we'll keep investing, but always thinking that Whitebook is it's the application that we want to grow and consolidate, because there is where we extract more value, specifically, again, on the journey of the doctor that we're focused on. But there is room to also invest in other, in multi-professional careers, of course. I mean, since doctors, they don't work alone, and my point here is that we think about the point of care. That's where we are thinking. And if the application and the software, everything that we're discussing makes sense for the point of care, then we will invest. We have significant number of other students from different healthcare courses, but still the main focus is Whitebook so far. Consolidate there, increase the market share that is already high. We have opportunities, if you see on the slide, opportunities to grow specifically for those doctors that are more than 5 years that they have already graduated, to create more specialized and more personalized experience. But then again, Nursebook will keep growing. We'll invest more to grow the base, and then that could be an opportunity to do with other healthcare careers as well.
Thank you, Julio. Very clear. Virgilio, just one clarification on your answer. You mentioned 800 seats under MOU. These seats is on top of, includes the 4 companies that you have already business relationship through the digital platform, or these are the 4 companies that you have the business relationship will be additional potential targets on top of these 800 seats that you have under MOU?
Susana, these 800 seats, they are out of this institution that we have the B2B relationship. But some of them under MOU, some of them are in our pipeline. We are having conversation the first stages. Okay.
Perfect. Thank you.
And ladies and gentlemen, as a reminder, to ask a question, please press star then 1. Our next question comes from Vinicius Ribeiro with UBS. Please go ahead.
Yeah, guys. Good afternoon, everyone. Thanks for taking our question. So just very quick one, two quick ones. So the first will be a call on the pricing on this intake process. Just wanted to get a sense if you guys change your pricing point in some of for entering students. And the second question is similar to one that was already asked about the BU2. Just like to understand how has been your approach for attracting students during this pandemic, and how should we kind of expect this to behave for the rest of the year? Thanks a lot, guys.
Hi, Vinicius. About your first part of your question, pricing point. We didn't change our strategy during this first semester and also in the second semester. We are just changing related to inflation. Remember that we have this recurring maturation on our average ticket because when we acquire an institution, we implement our national curriculum and also we change for our legacy institutions our curriculum back in 2017. So we have this recurring maturation of the tuition for the next 4 to 5 years that will allow to be at least 1 to 3 percentage points above inflation. So our strategy did change because of the COVID. Of course, that case by case situation with some credit to in terms of installment for the student to renew the following semester, but will not impact our good balance sheet and cash flow generation. On BU2, about what we are doing in terms of intake and the impact, of course that physicians were hurt during...
I think that's breaking. Can you guys hear us? Operator?
Yes, it's cutting a little.
I will repeat here. If you are listening well, Vinicius, please give a... Just in terms of pricing, we did change our strategy. We are in the same dynamics that we are adjusting inflation semester over semester. So that's the way we're doing. And remember that we have this maturation effect on our tuition, that we change our prices when we acquire an institution, implement our national curriculum. So as we... Okay. Okay. Just remember that we have this recurring effect of maturation on our tuition because change our curriculum back to 2017 for our institution, and we can move having this positive effect on prices for the next 4 to 5 years. On BU2, the intake process for graduate students, we have some impact in the middle of the COVID-19 crisis. We were postponing their decision to enroll in a graduate program for the following semester, for second semester. So what we are seeing that demand is there. The intake process goes to September and beginning of October to close all classes for our graduate programs, and we are seeing a very good trend in terms of volume to start the new classes in October. Also in the first semester, we saw 22% of growth on our BU2, and the second semester for all prep courses, we are having the new program started intake now in September. So itself is starting for 2021. Now in September it goes until February, March of the next year. So it's too early to know how would be the dynamic for the following semester.
Okay, thanks, Virgilio. What's clear is the second part. Thanks a lot for repeating it.
And ladies and gentlemen, this concludes the question and answer session. I'd like to turn the conference back over to Mr. Virgilio for any final remarks.
Okay, thank you all. I think we have some interruption during the call. Sorry for that. And this first half of 2020 and the first year as a public company have been unique for us here in Afya. We navigate firmly and steadily, even under all this uncertainty, and we have keep optimistic for the following semesters, the following years. So thank you all for the support during this first year as a public company, and I really hope to see you all safe in the next quarters. Thank you and bye-bye.
Thank you, sir. This concludes today's conference call. We thank you all for attending today's presentation. You may now disconnect your lines and have a wonderful day.